What if the biggest story in finance isn't on Wall Street, but inside the digital ledgers of the US government? While headlines focus on stock markets and crypto price swings, a quiet revolution may be underway in the very heart of America's financial infrastructure. Whispers in the digital asset world suggest the Treasury is piloting a new quantum financial system, built on a permissioned, private version of the XRP Ledger. This isn't just a rumor among tech insiders, it's a topic gaining traction among policy experts and financial analysts alike. This isn't just another digital dollar, it's a fundamental reimagining of how government money moves, instant settlement, automated compliance, and real-time auditing. The goal: to eliminate bottlenecks, reduce errors, and make every transaction traceable and secure. Imagine Social Security payments or military contracts settled in seconds, not days. For millions of Americans, this could mean faster access to benefits and services, and for government agencies, a dramatic reduction in administrative overhead. The choice of the XRP Ledger signals a shift from slow, fragmented legacy systems to a unified, efficient framework. It's a move that could set a new global standard for public sector finance. Quantum here means a system designed to withstand future threats, including quantum computing, and to automate complex processes. It's about building resilience for the next era of digital finance. This isn't just about speed, it's about intelligence. Advanced analytics and AI could help spot fraud, optimize spending, and ensure compliance in real time. The architecture is detailed, a private, government-controlled ledger using proven blockchain tech. Every transaction is logged, verified, and protected by layers of encryption. It's not a vague experiment, but a meticulously planned solution to the persistent problems of public finance. Years of research and collaboration have gone into designing a system that could finally bring government money into the digital age. If true, this could transform how trillions of dollars move through the US government. The scale is massive, touching everything from federal payrolls to infrastructure spending. The implications: unprecedented transparency, efficiency, and security at the sovereign level. Auditors and citizens alike could see where every dollar goes in near real time. Let's break down how this system could work and why it matters, not just for the US, but for the future of global finance. At the heart of this rumored system is a US Treasury-issued stablecoin, let's call it USTD, pegged internally to XRP. Imagine a digital dollar, but with a twist. Its value is anchored to a leading cryptocurrency, not just the traditional greenback. This isn't a public stablecoin, it's a closed-loop currency for government use only, like casino chips inside a casino. Only authorized agencies and contractors can access and transact with USTD, keeping it tightly controlled and highly secure. The peg to XRP is dynamic, managed by sophisticated algorithms. If XRP's value changes, the system adjusts the peg automatically, ensuring USTD remains stable and reliable for every transaction. USTD is used for accounting and record-keeping, while XRP handles the actual settlement, combining the familiar stability of the dollar with the lightning-fast speed of crypto transactions. Agencies transact in USTD, and the system converts to and from XRP instantly, shielding them from volatility. This means government departments can move funds without worrying about sudden price swings. No more days-long settlements or layers of intermediaries. The entire process is streamlined, cutting out unnecessary delays and reducing operational risk. A $100 million transfer between agencies, settled in seconds, with finality. The funds are available immediately, with no waiting period or uncertainty. Contractors get paid in USTD, redeemable for dollars, all within the secure, permissioned system. This ensures payments are not only fast, but also fully traceable and auditable. This two-token model solves the volatility problem and brings blockchain efficiency to government finance, paving the way for a new era of digital payments in the public sector. It's a radical departure from today's slow, risk-laden processes, replacing outdated systems with a modern digital-first approach. The result: seamless, transparent, and nearly instant government payments, setting a new standard for efficiency and trust in public finance. The system's stability comes from an automated buyback protocol. an algorithmic central banker, it ensures there's always enough XRP liquidity by buying from the public market as needed, based on real-time data. Think of it like a city's water system, always keeping the reservoir full, never running dry. This creates a steady, predictable demand for XRP, driven by government operations, not speculation. The algorithm isn't chasing profits, it's fulfilling settlement needs, providing a constant market floor. This stabilizes both the government system and the broader XRP market, reducing volatility. Liquidity is always available, and the process is self-sustaining. No human intervention required. The result: a robust, utility-driven ecosystem, not a speculative roller coaster. The rollout would be phased, starting with a major department, say, Social Security. Millions of monthly payments would test the system's speed and reliability. Once proven, other agencies like Health and Human Services would join, creating a network effect. Interagency transfers, once a bureaucratic nightmare, would clear in seconds. Budget allocations could be distributed to dozens of agencies in minutes, not weeks. A single, immutable ledger would simplify audits and provide real-time oversight. Each new department increases transaction volume, triggering more XRP buybacks. As the system expands, so does its demand for XRP, directly tied to government activity. This isn't a one-off event, but a continuous compounding process. The more agencies on board, the more efficient and impactful the system becomes. As the government buys XRP for its closed system, those tokens are effectively removed from public circulation, creating a significant impact on the overall supply available to the public. Unlike speculators, the Treasury isn't selling back, it's using XRP as digital infrastructure, integrating it deeply into its financial systems. This creates a scarcity engine, growing demand, shrinking supply, and increasing the value of the remaining tokens. Think of a factory that consumes diamonds daily, never returning them to the market, continuously depleting the available stock. Over time, the remaining diamonds, like XRP, become more valuable due to their increasing rarity. This is utility-driven demand, not speculation, as the tokens are used for essential functions within the government's financial ecosystem. XRP shifts from a trading token to a core asset powering government finance, fundamentally altering its role in the market. Public market observers could track large, consistent buy orders and wallet movements, verifying the system's growth and stability. The process is transparent, even if internal transactions remain private, ensuring trust and accountability. It's a visible, measurable shift in the asset's role and value, marking a new era in digital currency utilization. This system would redefine digital assets as infrastructure, not just investments. XRP becomes the TCP/IP of finance, a neutral, efficient bridge for value transfer. Payments settle in seconds, governed by code, not banking hours or intermediaries. Disaster relief funds could reach states instantly, not days later. Auditing and compliance are revolutionized. Every transaction is immutably recorded, creating a golden record. Oversight bodies could monitor spending in real time, slashing fraud and waste. If successful, this model could inspire other governments and corporations worldwide. The principles, neutral bridge assets, closed-loop systems, are universally applicable. This could set a new global standard for settlement and treasury management. The financial world would be watching and ready to follow. We're witnessing a shift. XRP is evolving from a speculative asset to critical infrastructure. This isn't just about price, it's about solving real-world problems at scale. A government using digital assets for core operations is the ultimate validation. It signals maturity and readiness for institutional adoption. The smart approach? Watch for utility and adoption, not just price moves. Monitor on-chain data, regulatory progress, and real-world use cases. The future belongs to those building and using the infrastructure, not just speculating on it. Whether or not the Treasury pilot unfolds exactly as rumored, the trend toward digitized finance is clear. The most transformative chapters in digital assets are just beginning, written in the ledgers powering tomorrow's economy.